Good afternoon, it's Melissa with thestockswish.com, and today I'm going to go over the market. I'm going to do a market review today of the Qs. This is Saturday, so obviously the market's not open. It's February 16th, and I'm just doing a little review today. It's good to do this for myself, actually. Well, I do it every day in my trading room, but sometimes it's good to take a fresh, clean, clear look at stuff on a weekend. And it's a nice long weekend this weekend. It's a 3-day weekend. The market's closed on Monday. So it's a good time to clean up your mind and refresh your brain and just take a clear look at things and see what's really going on here. So I've been reading the market sideways for this entire month and very choppy. And I did not really have a bullish bias here, even though many people have been bullish. Why? The bottom line is, we've been trying to go up so many times that we haven't had follow through. So once that happens time and time and over and over and over and over again, I start to think that we're not going to move higher. Now, we did get a gap that happened here. I did not think this was a high quality gap. To me, a high quality gap in this formation needed to gap above here and trade higher and close green and carry through. That's not what happened. We didn't break in the gap. We didn't open in the gap above everything. We traded higher in this day in 30 minutes and stayed stagnant straight in a straight line the rest of the day. We also didn't carry through any time in the whole week after. This was Monday. No, that was Friday. That was last Friday. It was more than a week. Yeah. And we had no carry through in that. Just seeing that now. I thought that was Monday. No. We didn't have any carry through in that at all. And that to me is not bullish. I think we're stuck in this area, the similar range we've been in. We widened it a little bit, but the bottom line is we're still in a range and we've really gone nowhere. What does this mean? Well, my take on the market is this, that because of the way that we've traded here, if the market's going to continue higher, it's only going to be a rally into resistance. And if the market's going to go lower, it can form itself and shape itself in two ways. One, do a professional bearish gap down and go lower. Or two, actually trade into it and continue through on the trading with 3 red bars, which we didn't do with 3 green bars here. An actual move is 3 bars, 3 to 5 bars, 3 to 5 bars, big bars, full bars, bars that close in the color of the move. Okay, that is not what has happened here at all in the last 6 weeks. Therefore, my bias in the Qs is not bullish. I know that these moving averages have been holding themselves up, but if you take a look at it, let's see how fat we can get this chart. If I look at the last, well, this is the last month. The 200 period moving average is straight. The 8 is almost straight with just a tight, with the lip up right at the end here. The 20 is almost straight, and the 50 has a slight bend to it. If I make it since the beginning of the year, let's just see. No, that's too big. Hold on. Well, this goes back to the 10th. The 200 is still straight. The 50 is actually scooping down a little bit. And so is the 20. And so is the 8. Gives you a better picture here. Really, quite frankly. So to me, the market is in a tight range and needs to break out of it in a direction to form itself. And unless it does that on a gap formation, I'm not going to say the market's going higher. I'm just not going to do it. I think we trade higher now. I think we trade higher, and unless the move comes in some way that's going to flip me to thinking that we're actually going to see some strength and some buying and some power in it, I'm going to just think we're rallying into resistance. That's going to be my take on this thing, as a rally into resistance, unless it shows some real strength, some power. I don't see any power in anything that's going on here. How could you possibly say that? There's hardly been any bars of any color. Most of these bars are doji bars that have gone nowhere. The market seems to trade in a neutral direction. It goes up, it comes in, it goes down, it holds, it flips. Even in this tight range in the last couple of days, here we look like we're going to go higher. We didn't even get up to the bar from the prior day. Here we look like we're going to go higher. 68.11, we didn't even get up for the bar from the prior day. No, here the gap was 68.13. So 68.11, 68.13, there you can see it. Now, we kind of were shaping ourselves on this day, on Thursday, and I thought, fine, if we're going to go higher, let's do it. But I even said in my trading room, I don't think we're going anywhere. Even if we get over 23, we're only going to go up to 30. Here. We're only going to go up to like 30, 35-ish. So I said, you know, listen, even if we break over that 23 number, I still don't think we're going anywhere. I still think we're just going right up here. We didn't even do that, though. We didn't even go up to 23. And Friday we were bearish. Friday we were bearish and we looked like we were going to go higher because, again, you can call this a buy setup on the daily chart on the 8-period moving average because in the morning we were green, but all we did is go up, touch an area, and come right back down. I thought we might come into here on Friday, but as it turns out, we closed at 67.56. 67.56. Let's see. 67.56. 67.59 was the close of this bar here. There, that's what we did. So that's what we did on Friday. That's where we closed. So until we do something to show our hand here in our direction, I think the market could come in all the way down here and retest in here, come in here, retest in here, or try to go higher again. And if we do, then we just rally up to this resistance area. This, to me, is forming itself in a way that until I see some big green bars with follow through, like green, 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 3 green bars, I can't say I think we're going higher. Despite the fact that we got this lift here in January 2nd, we really haven't gone anywhere with it. We've been trading in this range. It's been a really tight range. Yes, the numbers have varied slightly. From the gap itself, they've gone up a little tiny bit above it, and they've gone a little tiny bit below that gap. But we haven't really broken out of it in either direction. Forget the moving averages. Just take them out of your mind. In fact, let's just get rid of them. Let's get rid of them so you can see what I see in reference to just the price here. I think it'll just make it easier, okay, to just understand what I'm trying to say here. So you don't get sucked up into looking at all this stuff that has nothing to do with the price. All right. All right, let's just look at this. You didn't see any moving averages. Forget the moving averages. What would you say is the trend of what's going on right now in the trading in the last month? Really, actually, you know, if you take away those lines, it really, you can see that this is just completely straight across. Look at that. Really makes it a lot easier when you just look at the price. When you just look at the price action, because sometimes having the moving averages and all these indicators can be deceiving because you think, ooh, a certain trend. No, look at the price. The price isn't going anywhere. And that's how I've been able to read the market so well in the morning. When I'm calling the market in the morning, I'm so specific with my numbers in the room and saying what we're going to do. And I look at it in the morning where we're gapping, and I give my numbers and I say, if we do this, it's going to do this. If we do this, we're going to do this. And right now where we're at, this is what it's going to do. And my calls have been very accurate with the market, even in this tough range, because I'm looking so much at it with a fine-tooth comb, and I'm not getting sucked into anything else other than the price. All right. So if you just looked at these candlesticks here since January 2nd, what would you say is a trend? Would you say the trend is up? I wouldn't. Would you say the trend is down? No. I would say that the trend is sideways neutral, really sideways neutral, not even neutral bullish or neutral bearish. To me, it's sideways neutral. And the reason I'm not erring on the side of bullish or bearish right now is because of the fact that I don't have a lot of big green bars. I don't have a lot of big red bars. They're almost equal. In fact, let's count them. I'm just going to count the bars with color, with body. Okay, I'm not going to count any dojis. All right, I'm not going to count any dojis. Any large or medium colored bars is all I'm counting here, to be fair. 1 green, 2 green, 3 green, 4 green, 5 green. Okay, that's 5 greens. Let's count the reds. 1 red, 2 red, 3 red, 4 red, 5 red, 6 red. 6 reds and 5 greens, and even if I count this green, even though I think this to me is a small green looking at it, let's say I count this green, even if I do, even if you want to say, no, I would count that green, Melissa, it still would be 6 and 6. So either way, it's 5 greens and 6 reds. And if you want to count this green, it's 6 greens and 6 reds. So either way, it's neutral. It's neutral or neutral bearish. And to me, I'm looking at it neutral bearish. The real reason I'm looking at that is, to be honest with you, if the market wanted to go higher right now, it would have done it. The SPY's been rallying up now for the last month and a half, for the last however long. The SPY's been rallying. Why can this other market not lift the Qs with it up? Why? Okay. And honestly, if people wanted to be buying in this, they would be buying in it already. They've had ample opportunity. What do they want? What are they waiting for? What sign do they want? Here we had a bullish gap. Here we had a big green bar. And this was down here on some moving average. I don't remember off the top of my head. I think it was a 200 right at the end of the year. So then we had a big green bar gap up here. Then we did a buy setup. Okay, then we did another buy setup. Then we had a gap up. Then we did another buy setup. Then we did another buy setup. Then we had a gap up. Okay, then we did another buy setup. So there's been many ample opportunities in here for people to get in and to buy with power, and it's not happening. So that is the reason why I'm saying, you know, it's definitely neutral. But if I had to pick a choice, I'd say neutral bearish, because for some reason the market isn't wanting to go up. When I start to see some power in here, then I'll say fine, bullish. But this is definitely not a bullish chart. It's neutral. It's neutral. Before the last couple of days, before last Friday the 8th, this was a complete and total straight line. You could have almost made a straight line through all this price in here to the point of just being so ridiculously close. It was like, what? I mean, seriously. Now, we've broken out of a little bit, but even if you just look back since the 8th, look, you can make a line up here and the prices are almost the same in here. Really tight, just lots of tightness. So at the end of the day, I would say be careful if you are looking at the market with a strong bias, because you have to make sure that you're not missing anything. This is one of these times where if you are a sophisticated chart reader, if you're really studying stuff carefully, you're going to do well. You're going to do okay. You're going to show your true colors as a real good chart reader, okay, as a technical analyst. You're gonna shine in a market like this compared to other people that can't read what's going on. But if you want to just get sucked up into everything that looks like it's going higher and talking to your friends and they says, yes, we're going higher, and not actually sit down and do the work and draw out the numbers and figure out the spots and look at everything and really do the work, then you're going to get sucked up into the mainstream thinking that we're just going higher because the SPY's been going higher. Don't do that. Now, maybe we are going higher. Okay, maybe we are, but I don't see proof of that yet. And until we see proof of that, don't get sucked up into the mainstream thinking that we're going to go higher. Wait until we do it. But I got to be honest with you. And here we are looking at this, and I don't have any moving averages at all in here. I just think that the way that this move has acted, that if we really continue up here, that it's such a weak lift up, such a weak rally up, that I can't give it a lot of weight. I can't give it the weight that I wanted to give it when I thought we might break out of this in the form of a nice gap to actually break over 70.50. This here. Okay, what I wanted to see was a bullish gap up here and carry through and follow through and carry through and break above here and make new highs. But when I didn't see that, then I said, wait a minute. You know, I think we are going to rally up here, but I think it's just going to end up being a rally into resistance. Especially since the way that these green bars have formed. Remember I was discussing how they came in just the really quick time frames? In fact, let's look at the 14th really quickly. I know that the 8th turned out that way. So here, hold on. Yeah, the last 2 times it's been like that. Here was 9:30 into 9:45 into 10 o'clock. The day the bar, the market right there was that green on the 8th. Pittered out the whole day, went nowhere. That to me was just a rally into resistance. Same thing here on the 13th. Had this big move up, looked like we were going to go somewhere, went nowhere. This is at 9:45 into 10 o'clock, came down and retraced the whole thing. I actually called us to come in that day. That was a really nice call I made on the 13th. in my trading room. Completely retraced the whole thing. Went under the low of the day. Now on the 14th, we did close green. Went up. It went up to 1045 here. Did a 15-minute sell setup, based out, came up here into 1245. So this formation's a little bit better looking than this one or the one on the 8th. This is still weak. This is just still weak. Look at how, this is what I'm talking about when I'm saying a neutral. Here it is. Look, you can see. This is a 60-minute, no, this is a 15-minute chart. But even if we look at a 60, it's going to look the same. It's going to look like these tight trading bars in here. And you can tell even if you put the moving averages on how wiggly and jiggly they are. Like they're moving so much. This isn't normal. This isn't normal. They're moving so much they can barely even keep up with their movements. Some are going up, some are going down. They don't even know what to do with themselves. You know what I'm saying? If there's such utter confusion going on here. And all in all you have to do is draw a straight line through it and you say, oh, well, that's neutral. Okay? Despite the fact there's two big green bars in here. Two big green bars in here. But if you look at the price, it's neutral. See what I'm talking about? So you've got to be very precise with this stuff. That's why you've got to get to a place in your head where you can just think so clearly that you just ignore everything else but what's going on here with the price. Just read it accurately so you don't get confused. If the market wants to rally, then it's going to rally. There's nothing stopping it. No one's stopping anyone from buying. The SPYs have been rallying up for a while, so the Qs could be rallying up if they wanted to. It's not. Why? Why? You know, it's got plenty of room to go. Plenty. There's some stuff over here. You could say, well, it's you know, there's some congestion. There isn't that much congestion over here that should be holding up this market, not moving out of this range for like a month and a half, 2 months. I'm sorry. You know, it's just, you can't keep making excuses for things. This should be going higher now if it wants to. Where's the power? This isn't any power. There's no power here. It's weakness. And the thing is that eventually what ends up happening is that, you know, the way stocks get tired sometimes. Sometimes a stock will have a big move up, and then it will have a big move down. I'm just talking about two trading bars in a row, for example. Say something rallied up big one day, closed with a green bar. Say the second day it gapped down and had a big gap down day, red. Another big day. That stock's going to be exhausted. Exhausted between the rally the one day, the big gap down, and then the sell-off then in the day of the stock. It's going to be exhausted. And I don't care which either direction you're talking about, either up or down. I'm just showing you an example. In that case, the stock itself will be exhausted. The same thing is happening right now with the market, except for it's happening a different way, okay? What I see going on here with the way that the market is trading is it's exhausted. Therefore, I think it's going to take even more energy to move it higher. Because remember, it takes less energy for something to go down than it does for something to go up. Okay? So the fact that market keeps trying and trying and trying and trying and trying and trying, can't do it. It's this market, even though it's not in the formation that I just described, the way a stock acts, is acting like something that is exhausted because it can't do it. And the longer it tries to do it and it can't, it's exhausted. And therefore, the next action will be what? Down, because it's too exhausted to go higher. It's exhausting itself here. There was a lot of energy here that could have gone higher. It didn't do it. Instead, it's exhausting itself trying and can't, in which case my bias is bearish for the eventual move. Now, the question is, the way we're forming here, I think we rally up to this level before we completely exhaust ourselves and fall. And that's my take on the market. So this is Melissa with thestockswoosh.com. If you have any questions, please feel free to email me at melissa@thestockswoosh.com. If you would like to join my live trading room, please feel free to contact me at melissa@thestockswoosh.com for information on the room and how to join and sign up. It'd be great to have some new members this month in February. It's a beautiful time to be trading gaps, and that's what I call in my room, and I also call the market every morning. So have a great weekend. Have a great long weekend, everyone. And I'll see you next week.